Hey everyone, this is DayTraderRockStar, and this is the HPS watch list for the week of June 10th. And we just came off of a rocking week. If you listen to the show, which I think you do, you knew that I was looking at a textbook flag that was forming in the market, and there's no doubt about it. There was some fear last week. There was a lot of people thinking that we were going to break down, that the trend was over, the rally was over, and everything else was ready to kind of go into correction mode. And that's usually what happens when you come to a line in the sand. It's just the nature of the media, to point out different things. There's when people make their bets, you want to make the bet when it's time to make the bet. So you had an option. You had an option that's hang in there with that bullish flag, or you could predict, a breakdown of the overall pattern. Now, I stick to pretty much a disciplined system, and the underlying basis of a lot of the momentum, the moving averages, the trend, and everything here pointed to a nice continuation flag, bull flag. And you could see this on the multiple time frames, which was really great for me. I was just like, couldn't understand why the thing was acting so perfectly. It was sometimes even hard to say, all right, this is a perfect setup. This is a wedge pattern. We have a lower channel line. We have a coiled stochastic on the 60. We have a perfect flag on the daily. We have the 50-period moving average holding. We have the trend line holding. We have everything here. A lot of what I would call underlying stocks in the indexes, all lining up as extremely oversold levels and looking for a nice balance. It was just like it was a perfect situation, and it worked out great for us. I stuck to the pattern. The 60-minute setup was key, and what's even better was the 1-minute chart that we follow each day on the futures. So if we take a look at the 1-minute chart, we did notice that over the last 2 weeks we formed this large channel, and I took advantage of it. I did have some SPXU going into this week, and we took it off. I took it off as we were starting to come down to the lower part of this channel line. Also started taking some SPY calls down here for an upside move, and even some futures trades. So everything worked out perfectly. The lower trend line here held up perfectly. This is based off a 1-2-3 pattern. And, there's a lot of videos on that, and I've been going over that for the last 2 weeks now, how important that 1-2-3 pattern is, determine where your pivot areas are and taking advantage of them. The analogy I use is when when the pitch is over the plate, that's why you're there, to take that swing. So in this case, perfect week. Everything worked out great. The setups were really good. There's a lot to go over this week. I don't want to make the video too long because I'm working on some new stuff. But I do have some great setups for you, and we're going to go, kind of review some of the setups that are still active right now. So, again, just looking at the S&P 500, textbook flag, held up nicely. 60-minute chart was just a key lower trend line support right off the lower trend line. I mean, it was a recognizable pattern all the way. I mean, it just doesn't get any better than this. The equal distance to make those patterns come out. Once you came down to that level, you had a coiled stochastic. Everything lined up perfectly for that big move. We pushed right up against the trend line on Friday. And at that point, we ended up starting to get a little resistance here, and we closed out very strong on the day. This pattern typically breaks to the upside. All right. And, there's no reason not to believe that we might not just get a follow-through trade and continue on with this summer rally, an early summer rally. So, I want to continue to take a look at the underlying stocks, the HPS setups. They're going to give us a good clue of, what's underlying the markets, what's holding the market together right now. We see a lot of rotation. I see a great sector setting up. We're going to go over that today. We got some great setups, so we're going to kick that off. I hope everyone had a great week last week. Like I said, I'm kind of working on something new. There was some setups that I would like to get some better alerts on. So I'm working on a new alert system, and I haven't told anybody about this. I'm kind of excited. That's why I'm here on a Saturday. I couldn't finish the day Friday. I apologize. I had some issues come up, but back here on Saturday, and we're gonna get ready for Monday morning and take this market apart again. So let's kick it off. Let's just kick this thing off by reviewing some of the HPS setups and some of the current setups that are on the HPS site. All right, just taking a look at the HPS setups. We're going to start off with Verizon. Verizon was definitely a key stock for us this week. We traded it multiple times, and we also had a swing in it, and it just worked out great. This is the setup that goes out on the HPS watch list. And for those out there who might not know about the HPS watch list, we have, an alert system that is for members of Day Trading Radio, where we do recognize the high probability setups based off the indicators that we use. When they do trigger, you get that alert, via email, via chat room, via different sources, and you're able to take those trades in case you're not in front of your computer. So you take a look here, and you can see that Verizon came right down to that buy trigger and bounced back up. It's pulled back again. This was off the 60-minute chart, so this is you can see how it just pushed right up into that 50 zone. And we actually had a couple scalps on this too, so it worked out good, because even looking at the scalps, following it, seeing the strength, seeing this recognizable channel line. This is a good example of something I wanted to go over today. Lots of times you'll see a channel. In this case, you're looking at a Verizon, these dotted blue lines, and it's not a perfectly formed channel. You have three pivots, three or more pivot areas. You draw that line in there, and what happens is you might get scared off saying, "Oh, it's not it's not a channel. It's something weird about it." But that's okay. Most likely that channel will fill itself out, and that recognizable profit zone will be, what we call a measured move out of a channel, or a downward wedge pattern like this, will be extend that channel line out until it's a recognizable perfect equal distance channel, not a wedge anymore, and that's going to be your first area of resistance. And from that point on, you can see we pushed right up against the orange line, consolidated here, came back down, what we call divergence in a channel, which is a very strong, one of the strongest setups. And we're going to go more about that. That's an unbelievable setup, and that's what we took on the scalp, and boom, it took off, and it was just history from that point on. It also took our swing off into that profit zone too. So great trade overall. Now CNK, Cinemark Holdings, there is an underlying trend line on here that I'll show you on the other chart, but I was more looking at this downward flag. It was a positive stock. It did break down a bit. I ended up holding on to it, and you can actually see it didn't come down to our stop, which is at $28. Pushed back into the channel now. It did come through that little level there, and pushing right back into that buy zone. Again, a lot of stocks here bouncing later in the week, or actually on Friday. So this is actually still very active, and I would expect this to push back into this channel a little bit more. We'll probably go over this one a little bit more. All right, here's the daily on Cinemark, and you can see that larger channel. This is really weird, because you had a spike down over here, and that, I always say, whenever you see a spike down or something in the chart that just does not set up right, you have to consider that. And I think that was a mistake on my part, because whenever you have a data point being made and there's price history back here, you have to recognize that, because what happens is the algorithms recognize that. This becomes an area of interest, and if I were to drop that trend line right down to that level, you could see how that made a perfect channel. Now that's great. Now it's after the fact. It's now I look at it this way and understand that there is those times where you get those flushes, but as long as there's a print down there, that goes in the history books, and this ends up being something that has to be calculated on, when you talk about how the markets are traded and stuff. This does become an important level. Then I drop that parallel trend line down, which represents a pivot area. Next thing you know, you're coming down to a multiple pivot area level, a 1, 2, 3 pattern. 1, 2, 3. You trade 4. It worked. I mean, you just can't set that up any better than that. What gets you excited is in a random, walk through Wall Street, or I just use that as a, but the random sessions. You could move down. Why didn't it move down 50 cents more, or why didn't it just bounce here? It came right down to that channel line perfectly, almost to the penny. And what happens is you get the confirming indicators lining up here, and the next thing you know, it's back off to the races. Now, another thing you can see here is when I did put a cheat sheet out on the 1, 2, 3 pattern, and whenever you have a gap in the stock price, you have to use that as a pivot area. I use it as a new channel, especially if you have a recent breakout. This gap up here becomes a pivot area. This becomes a pivot area. You can see this pivot area. So we had 3 pivot areas. So if I actually drop that trend line down, use this pivot area as a recognizable channel, and just draw a parallel trend line, boom, once again it comes down to a lower trend. So you have multiple trend lines. You have the oversold. It made such a great setup. I think it was my mistake that I didn't recognize that we had that data point down here, which would actually adjust this channel. But I won't make that mistake again. Fantastic chart now lining up on this. So again, you still have a good trade on this one down in this level with a stop underneath this, probably a breakdown of this channel line. But it's still active right now, still holding on to it. But a great setup of watching that. Google, G-O-O-G, one of my favorites for this week, and it performed good. At the end of the day, on Friday, $880, $890 a target. It actually, my biggest concern was, where do you place a stop on a stock that could have swings of 10 to 20 points, So it's really, that's something that has to be managed on an individual basis. How, you can see actually we didn't trigger on the HPS site, but I can see that we did candlestick right, it looked like we had a fast little dip under that stop level and then push up. I ended up holding on to my calls on this, and we have a nice profit on it now. It just one of the textbook flags, quality stock. It's on its way to 890. Probably if we get some follow through on Monday, Tuesday, probably take those calls off too, because we always want to be proactive instead of reactive in the price thing. We have a nice reversal candle. This big reversal on Thursday kind of called that too. I said watch for a big move here on Google. Then today, Friday, we had a nice follow through, and you can see that's just starting to turn back up here on Google. It's just starting to move back up, which is a very positive setup there also. So who knows how far this one actually has to go. This could be the last big setup here in Google before it pushes back up here above $900. 60-minute chart, you can see starting to come out of that 60-minute candle pattern right now too. And again, here's another example of that. When I was watching Google, I said we're in a nice wedge pattern. We're coiled up here. It's not the best setup, but the wedge pattern down here usually downward wedges break to the upside. Measured move would be the extension of that wedge channel line up to a parallel channel line, and we did break through that level, which is always good. And these downward channels typically break to the upside. So, still going into next week, target should be hit. Well, Dunkin' Donuts. What can we say? One of the great stocks out there. This is and again, when I did correct Dunkin' Donuts last week and put it on the watch list, I said, well, you know what? I noticed that flush down here, that little candlestick back here. I said I better pay attention to that. And so I drew that parallel trend line down to that level and made sure that buy area kind of took that in consideration. And then look how we actually spiked low. We actually bought into that spike down, and it was a tremendous reversal, pushed right up to our profit zone, and it looks like it's going to continue to move higher. I think Dunkin' Donuts is one of the better stocks out there. You could just continue to hold that and ride that one higher. Here's another example of that downward channel. You can see how we pushed back down. This was the recognizable channel because of this pivot area down here, and this pivot area here. When we got a gap down to that level, we picked it up right there, right off of that level. Boom. Off to the races, and the daily here showing just a good continuation pattern. I would expect this one to continue to move higher and eventually take out the highs again, which is not that far. Stochastics here very bullish, and everything looking good on that. All right, AVB here, Avalon Bay, brought to us by one of the members earlier in the week, and it didn't take more than Monday before it hit its target. It just fired up. It was a perfect underlying trend line. We broke out, so there's a multiple setups here. What we call this is what we call a channel, a pullback channel with a stochastic pullback. But we also had a stochastic rotation out of on a channel breakout. All right, here's Church Dwight Company, CHD, and again, it was a lower channel line. Whenever you have those parallel channels, you have to watch the different levels of support underneath this. It did pull back just a little underneath that, reverse push back into the channel. It still looks set up pretty good. Still actually active. And we're going to continue to follow that one into next week, plus many other ones that we're going to be bringing up here in a second. Hess is another example of a nice channel set up here. The recognizable underlying support lines combined with that underlying trend line. Multiple indicators, channel trend line support, 60-minute wedge pattern. I'm going to show you that. Buy trigger really above that 67.65 level. Profit zone 70. And the oversold stochastic relining up there. And you can see it's actually started pushing back up. We hung around there. And what was fine, you can't see it on this chart, but I want to show you the 60-minute chart. When we kind of look at a daily chart, we always want to pay attention to that 60-minute chart, because that 60-minute chart is really the short time frame, and it just really pinpoints your the safety area. So here's your daily. We did see that we had this downward wedge pattern. We kind of chopped around here. Remember those downward wedge patterns? Even though if you see it, you could extend that out to a nice little channel. And if we saw that channel, you're going to see a better example of that channel play out now. We're just oversold on the daily, so the daily getting that crossover. And that 60-minute chart really was the key here. Now you can see that channel line. And that channel, that downward channel here, really put together well. It was just a nice set of pivot areas, pivot area there, pivot area there. The pullback, which we call a stochastic, a channel divergence. With the, we have the stochastics oversold, getting oversold on that 60-minute time frame, but we don't make new lows. So this is where most of these patterns break out, is when you put a double bottom in. So I loved it, and at that point, that was really your last great signal on this one, Hess Corporation. Now it's a little extended, all right, and we talk about, knowing when the swing, when the ball's over the plate. Here's the ball's over the plate here. It's hard to say. Are we going to go embedded? We're going to move higher? Probably are. We broke out of that channel line, but, we still want to always strive to get the best entry. So going forward, you're going to see, constantly just trying to bring you that overbought, oversold, depending on if you want long or short. Right now, is there an opportunity for a short here? Yeah, but the market's strong, and that's not the game that we want to play right now until we start to break down out of some of these patterns. So Hess still in play, but Hess, wait for that 60-minute to set back up. 60-minute setup here comes back. If this rotates back down, we pull back to this trend line. We actually just started putting in a new pattern there. Channel line, channel breakout, stochastic rotation setup. But until we identify that as happening, we're just going to look for this further upside. Here we have SAP. SAP, what a nice setup. Originally, we took a good trade off that 200-period moving average, as it was in reaction. This pullback was in reaction to a Salesforce.com earnings call. It popped up. Then we put it on the list here. Nice, recognizable 1, 2, 3 pattern. We even have an underlying trend line, which this buy zone right here could actually bring it right back down to that trend line. But we looked at possibly that double bottom stochastic, the double bottom channel divergence, and the move back up off of this. And you can see we actually tagged, came right down to that trend line. Was a perfect trend line tag, and from that point on started moving back up. So we'll take a look at that a little closer. And that's SAP. This one gaps up a lot, but definitely something that you want to identify, or at least I want to identify for you, and get those alerts out to you. So what I'm actually doing here, we're doing a little, I'm trying to put a little extra credit in today, and set up some trend line alerts for you. I'm going to try to set up some trend line alerts that go out with the HPS alerts, and have these activated whenever they're set up on the HPS 40, which is the core group of stocks that I want to use, which is over 40 stocks. But I want to be able to have these trend lines in here, and it doesn't matter what time frame it is. If it's down here a month down the road and we get back down here, I want you to get that alert, so you know where it is, know what's happening on this stock at all times. So right now, great setup, great trade. It's just starting to move up. I would expect this to move up even a little bit further, but once you recognize that pattern, you got a quality stock. You could always come back to it. Here's Goodrich Petroleum, another stock that we've traded earlier in the week, and this is going into next week. I am putting this back on the list. It's one of the best. Well, as a low price stock, that's my issue with this stock. I try to stay above $20 on stocks. Anytime you get underneath that level, you start dealing with garbage. Not to say that it's garbage or anything, but I just find that stocks traded above $30, $40, $50 just tend to pattern out better. These stocks sometimes to grind out, and it gets frustrating after a while, and it sometimes causes you to up your ante. You think, well, it's a lower price, you get more shares, and you end up getting more shares. You take on more risk too. But anyway, great setup here. Great setup going into next week. We'll go over that. We're gonna have a new setup. This actually never got up to the profit zone. We ended up taking profits on this. I ended up taking profits on this on a breakout of that setup. And now it's pulled back down. It's pulled back down into a channel divergence level here. The same thing we just talked about seeing on Hess. Remember we saw Hess. Just go back. Oops. Give you an example of the Hess setup. So many terms that you hear on a 60-minute chart. So here you go. Downward channel, double bottom, oversold stochastic. So that's your Hess setup, and an example of that. And here we are, a downward channel, double bottom. We're going to be oversold. Let me show you a better chart on that. But this one is actually going to be set up in GDP. End up taking those setups. 60-minute chart. Okay. Here we go. So even though we did break through that minor trend line, we do have this new channel line here developing. That's what I'm liking. I'm liking this a lot. We just got oversold again on the daily. So the daily is oversold. We have this nice kind of bottom here. I'm going to extend this out when you can see the pattern a little bit better. It's not, again, the low price is a little concerning, but we're going to look for a bounce out of this pattern to the upside. Double bottom, we're going to look for this pop out of this and move back up. So go back out there a little. It's just because of that divergence. Next, please. Now, this is an old setup that was on the HPS watch list. The reason it would continue to be on there, it's never hit its buy zone trigger. So when I did put it on here, this is on the daily, it was about maybe 2-3 weeks ago, I put this one on the list. And because it didn't hit its buy zone, I just kept it on there. So you see it on there. It's not triggered or anything. And you could see how this, I wanted to see if we got that breakout of that channel. What happens is we gap down and move back down into the pattern. So I'm going to click on that, and you can see how that moved all the way back down. Now, because of the static chart, if I took this trend line right here, and extended that right down, you'd see that we're right back down to that trend line. Now again, Valet, PBR, some of these stocks, even the steel stocks, very, coal stocks, not good performing stocks. I tend to shy away from these. But again, you have to recognize, it's sure interesting to see a good setup like this. So let's take a look at the Valet on a different chart. And here I extended that trend line for you, and we're right on it. Now we're chopping around here, and it doesn't mean that we can't head lower, because crap usually sinks to the bottom. But this stock has reacted, always reacted good on lower trend line bounces. Here's another one where it was a beautiful trend line bounce, and it's a little bit cheaper now. So I'm actually liking this a lot. I'm actually liking this quite a bit. We have a kind of a coiled up stochastic, could push a little bit lower. Something just to keep an eye on. Like I said, it's not a good performing stock. You take a look at the weekly chart. This thing has been going down for the last 4 years. So not to say that we're going to hit a home run or a but this is an area where, of course, looking back at the recent levels, nice pullback from the 20, nice pullback from the 50, the lower trend line support, recognizable pattern. The stochastics could be a little bit better. It looks like it's very choppy here. I'd even pay attention to a blow-off bottom type of thing, where you did get a spike down and a reversal. I'd watch for that reversal candle on a setup like this. I definitely would pay attention to of some type of reversal candle. Some kind of candlesticks, putting in something to try to gauge this off of where the good entry is going to be. Or you just start scaling in down here. 60-minute chart. Here's your 60-minute setup, and very possibly that 60-minute setup also setting up as a downward, and saying, wait, Johnny, this doesn't look like a perfect channel. It looks like more of a wedge. Well, what do you do with the wedge when the downward? You look for that trade up to the parallel channel line, which would bring us short-termly up to 1490. That's not bad. Well, actually, I would say 1480 to 1490. 30-cent move, $14. That's the potential. That's an early potential move right there. And not to say that we have a good shot of actually breaking out of this pattern. So I'm going to watch this. We'll watch it. Like I said, it's not a priority. I don't think you're going to, bet the farm on this and be very careful in a stock like this. But it'll be great to see how this plays out. All right, here is Liberty Global. Now you can see this one also didn't trigger on the HPS side because I had a buy trigger. We had a buy breakout, which did trigger. But we had another chart on for this week, and it was in case we get a pullback to this lower trend line. And what happened is the market actually ran up here, and I kept this one active on here. But what you see here is interesting. Because this is a buy zone and it comes into a level, if we're looking for that lower trend line, as this stock continues to grow, most likely this area should rise up, because the reason I put this level here, this buy zone here, is because this underlying trend line. So as the price continues to move higher, this trend line moves up, this should actually move up with it. And if you click on this, you can actually see how we actually pushed up here. Liberty Global broke through that trigger, but now look how we came back. And when we came back, we came right back to that trend line and we popped aggressively off of it. So that's another reason I'm going to be adding some trend line alerts to the system here, just so you guys have that opportunity in case the stock moves up and then comes back down and doesn't really get back to our buy zone. We need to have these trend lines underneath. We need to have something that continues to follow a good trend and lets us know each time that trend comes back and is tested. All right, so let's take a look at that on LBTYA. And you can see that beautiful underlying, that channel that we key on all the time. And then we could probably zoom out here. Where is it? There we go. Well, there we go. Let's see if that's actually right on that trend line too. So really good pivot areas here. This is a nice pivot area. This is a nice pivot area. Some nice flags here. Some nice flag. Whenever you have that pivot area, that pivot area is defined by that channel breakout, that short-term trend breakout. That sometimes it can be confusing, like where's your pivot area? Well, your pivot is usually an area on the map or on the chart that you can definitely distinguish as a turning point. So when you do see this flag, there's your pivot area. Here's your pivot area. And then because you have the two pivot areas, and this one, even though this one didn't come down to that level, this still really is the underlying pivot. And from that point on, we pulled right back down to it, textbook. So you had an underlying daily, oversold daily, and you had a downward channel on the 60, oversold 60. This really became a pure HP, what I call pure HPS setup. So when a daily 60, multiple indicators, recognizable pattern, everything lines up exactly. It was just, explosive move in this. Explosive. When that happens, you usually do see the biggest moves in that stock. Lots of times you see this choppiness. But when you have that multiple, indicator setup, then you get that big extension move. Here it is again. Boom. And you could probably go back to this 429 here. Yeah, right there. You probably see this oversold daily, oversold 60 again. So the combination of the daily 60 plus that recognizable pattern, just key. Just key. Like I said, if we could just take these setups, that's what trading's about. Having the patience and disciplines to just get in on the positions you want to get in, focus on them, That's what the HPS setups are about. So now for some new setups. And this is where I stop the video for the general public, and we start our membership video.